let's go ahead and jump in because we've got so much to go over. Who could sum up what's going on between real estate and mortgage stuff?
Well, I can tell you, remember the house that I listed was a fix and flip, and we listed it for $375, and that was in like April or May or something. I can't remember, maybe May. And he was declining offers for $350 and $340 and $330, and it finally sold and is closing the end of this week or the beginning of next week for $292.
Oh man.
So that gives you an idea of what's happening with our market.
Absolutely.
And the rent market is just as quiet. My house on the golf course, Arrowhead on the golf course, we just dropped from $34.99 to $3,095, and I still can't get it rented.
Wow.
Yeah, got shown twice in the last 5 days. Got shown twice.
That's pretty shocking.
So
I think what's happening is people's because of inflation, their budgets are shrinking.
That's
both
right.
On the buy side and the rental side, so they have to throttle back on what they can spend.
That's exactly right. Yep. I agree. And $3,095 is a bargain for this house on the golf course with a pool, big covered patio, 4-bedroom, 1 level, and it's beautiful inside, fireplace, gourmet kitchen and stuff. But one of the drawbacks that I'm finding is that people don't know how the solar works, and so I'm not interested. It has solar. One person said that this weekend. So I don't know. It's a gorgeous home.
That shouldn't affect anything other than just lower a monthly
bill. Exactly.
Yeah, solar works very, very well.
It does.
It's set up correct.
It does.
And if it is set up correct, it's an extra added extra value to the house, really.
Oh yeah, it does.
Yeah, Ruth, just have Fred talk to him. He's like one of the best solar salesmen at this point.
Yeah. Well, the thing is, and I always just tell them, because when I took the one of Howard's into management that had solar, I just called APS and talked to them.
Yeah.
I told the agent, I said, have them call APS on Monday morning and talk to them. They'll explain it to them. So that $150 goes to their electric bill for a 4-bedroom, 2-bath with a pool, 3-car garage home, and they'll rarely have to pay more than that.
Yeah. Yeah. Fred, how much has yours saved you in the last, 6 months? How long have you had yours?
Well, last year, my monthly, of course, I didn't pay anything for my system. It depends on what system you have. If you purchased it and it's mortgaged, you're paying payments on it, then that's a different issue than if you're just leasing it and paying somebody else that owns it.
Yeah. But what is your average net monthly benefit after your payments, after everything? Like, how much are you saving per month, would you say?
Oh, probably $150 at least.
Mm-hmm.
There you go. So $150, that's $1,800 at the end of the year.
And I'm a low user. I'm away from my home a lot.
Yeah.
But of course, when I'm away from my home, I'm still generating electricity that I sell to APS.
Good man.
Yeah, that's right. That's what APS, they explained that all. That's why I said, have them call APS, because APS will explain that to them.
Yeah. Interesting. I haven't heard that in a long time. On sales, it used to be a thing with the transfer to people who didn't want it. But as far as a rental, never heard of that before. That's interesting. Anyhow, okay. So can everybody see the screen?
Yeah.
Yep.
All right. So this is the rent check, closed rentals in the MLS for the month of July. Okay. Now, just to kind of recap, go back to basically the beginning of 2019. Okay. You'll see the monthly activity, 1,600, 1,700, 1,700, and it just kind of hovered. And it was that way for the most part, straight on through right up until last month. And now for the first time, we actually have, we are significantly over 2,000. We're at 2,294 and 2,289. The last time we had a 2,000 plus month was actually, July 2020. right? And then yeah, I mean, geez, what that means obviously is that there's more activity in the MLS for rentals. Now, Ruth, Fred, Bob, both of you probably know very well the biggest reason we've had a rise in rents so dramatically was because of what?
Well, the lack of housing. People couldn't buy.
Yeah.
Yeah. And so there was lack of supply completely for the last 3 years, significantly, right? So now that we're seeing, notice back in January, we did 1,500 units, then February, 1,800 units, and then 1,900 units. For some reason, there was a drop, 1,700 units again, but then boom, May, June, July, 2,000 units essentially, 2,300 units essentially, and 2,300 units essentially. Why do you think we've seen that many more rentals? And these are closed in the MLS. Okay, so this is kind of weird because we have to lead what led to that many more people being able to rent from the MLS in general. Make sense?
Yep.
So yeah, well, I talked to a gentleman the other day who had his house on the market with Lisa for 90 days.
Okay.
90 days. And couldn't sell it. So now he's thinking about converting it to a rental.
Yeah. Yeah, I have other stuff on my screen. The MLS is somebody where they might be able to pull up the active rentals in the MLS today?
I can do it.
Because historically speaking, what do we have? Like, what is it, about 20, I think, is it 4,000 or 2,500? Somewhere in that ballpark.
Okay, so just active rentals as of right this moment is 5,108.
So if I remember correctly, I don't remember the last time I saw 5,000 active rentals on the MLS. Am I mistaken in that?
No, I think that's right. I think it's normally around 2,500 or something.
And I thought like around 4,000 is like where it kind of peaks, like, I don't know. What do you think, Bob? Mom?
Yeah, I think that sounds about right. 2,500 to 3,900 is the gap there. I don't think I ever, like you, I don't even think I've ever seen 5,000 on the market.
Okay.
Yeah.
Well, that leads us to, here we go. So our median lease still is 2,200, average lease 2,373. We typically go off the median. So our median lease is 2,200. Now, when it comes to the supply and demand, how long do you think before we're going to see a drop in the average median? I think it peaked out at 2,225, if I'm not mistaken, like a couple months ago. So I know we're already experiencing a slight drop, but 2,200 is still, what do you guys think? High? Where do you think we should level off at?
Yeah, I think it's a little high. And I think this fall, you'll probably see it. You'll probably see the prices start coming down. Just like
I think so too.
With hers.
Well, yeah, I have 3 kind of luxury homes, one out in Goodyear, and he wants $4,000 for it. Doesn't have a pool. I mean, that's not going to happen. So, I keep sending him back comps. Here's what's happening. Here's what's happening. So finally, my Arrowhead guy said, okay, we'll lower it to $3,095, and it still won't rent. It's a beautiful home. So I don't know, and the problem with these empty houses is that, so over the weekend, somebody stole the sweep out of the pool. They just jumped over the view fence and took the sweep. So that's the problem with these empty houses,
Yeah, I wonder if the Californians have slowed coming over. I don't know if you have access to any numbers like that, Josh, or whatnot, but I think that's probably one of our biggest draws for these, especially higher end ones like you're talking about, Ruth.
Yeah,
it's probably Californians coming over here, and they must be slowing down on their migration over here.
Yeah,
I think that's probably happening.
Oh, I already got out of that screen. Darn it. Okay. Yeah, I was gonna see because the right here, the 2 to 5 means 2 rentals for every 5 sales, and that's an odd number. Usually it's like 1 to 4, something like that. So we're actually seeing a kind of jump in the amount of rentals per sale. Interesting.
That's because the number of sales are going down because of the interest rate.
Mm-hmm.
So it's not a question of the sales going up, the sales are coming down.
Yep.
And so that ratio is getting basically smaller because of that.
Yeah. And I mean, look at last year, this same month, we did more. It wasn't until 2017 that they did 25, you know. So these are rental numbers similar to what were historically average back in the day. And so if these were the averages back in the day, obviously that means that there's been a huge hindrance, and not that people are not wanting to rent, but they aren't able to, is what that appears to me. Because the population of the valley has just gone up. It hasn't shrunk, you know? So I'm thinking that, yeah, over the next month or two, we're really going to see some drops in rental prices. Where do you think, because last what was it, last week or the week before, we broke down the average rental, and what did we say it was, Marilyn or Ruth? What was the it was how many square feet?
Oh, like 1,589 or something.
I thought it was a little bit higher, wasn't it?
Was a little bit higher.
I thought
16?
it was like in the high 1600s or
Yeah,
low
maybe
1600s.
1,600. Yeah.
Okay.
I can't remember.
So last week or the week before, we actually went in the MLS and broke down what the average rental is for this $2,200. What is it, right? And it was basically a 3-bedroom, 2-bath home, built in like the, you know, on average in the like the 80s or whatever, but just a standard 3-2, about 1,700 approximately square feet, nothing special. 2-car garage, that's it. You know, no pool, obviously. So where do you think that home should be? What do you think it should rent for? Truly.
1,700 square feet?
Yeah.
Well, Ruth would have that better than me. I would think it'd be below 2,000.
Yeah, I was going to say 1,695.
Yeah, well, that's what I was going to say too.
Yeah.
About a dollar a square foot?
That close, but
Yeah. I mean, realistically, that's probably, I mean, our everything's been so inflated the last couple of years. It's hard to talk about what's realistic.
Well, and I think one of the things that inflated it was the Californians coming over. So increased demand really pushed rental rates up probably 30 or 40% where they should have been if we didn't have the huge influx of population from there. Plus the Californians, they generally make more money than Arizonans, so they can afford a higher price point and they're not afraid to push it up.
One of the guys that I was talking to that wants to come work with the Handyman company, he was I forget where he was gonna. He had a choice between 2 different places, and I think the one in North Dakota, whatever their main city is it Bismarck or something? I don't know, but he could go there from where he was at and basically make $10,000 more. But he would have to pay almost like twice as much in rent. Like almost everything in the area compared to where he's at is almost like twice as much. So he consciously made the decision that it you know, even though he'd be making $10,000 more per year, it wasn't going to be a good decision for him, which is why he was thinking about coming here instead, because here he'd be making about $25, almost $30,000 more than he's making up there.
Yeah.
You know, and cost wise, it's almost the same price as their main spot, you know? So it's all about income and, you know, relative to the area, you know? So I think $1 square foot, $1.15 a square foot, that's about max. What do you guys think? Mom, Dad, you're pretty, you know, in the rental market yourself. What do you think? Are you guys able to? You're muted. Oh, hello.
I think you're still muted.
Yeah, you're still muted. Can you unmute it? There we go.
Oh, there he goes. Now he's there.
Well, whenever you ask what our rent should be, I think of a couple of different things. First of all, the rent is going to be determined on sales price of what the person has to recover in order to pay for his purchase.
Cash flow.
And so that's going to have to kind of settle down before rents are going to settle down. I think rents are going to stay high for a while. You were talking about different areas. We were speaking to somebody that is in computer engineering over I think it was Friday or Saturday, and the computer engineers that are working out at, what is it?
It's where they TS. What's it called?
Can you hear?
Yeah.
Anyway, out at Los Alamos, their engineers cannot afford to rent without sharing expenses with another family because the rents are so high there. Yeah, a 2,000 square foot home is $3,500 a month, and the thing about it is that they're comparing Phoenix now to that part of New Mexico, the Los Alamos, because we're starting to get so many computer manufacturers in and parts manufacturers in that they're thinking that the investors are hoping anyway that their rent is going to continue to increase, and so that's what we're seeing. I think the rents are going to stay at least really strong, but I believe the purchase price is going to flatten out, and then later on, maybe 6 months to a year later, the rental will start to at least balance out or go down a little bit.
Okay.
Well, what was interesting, one of the agents that was showing the Arrowhead property on Saturday said, well, we have like 5 others to see. So that's where you're seeing that 5,100 on the market having some effect, because normally there, you'd have a couple, one, maybe yours would be the only one, but now out in Arrowhead Ranch, there's a ton of them. And so she said, well, we've got like 5 others to see. Okay. So there you go. I mean, I don't know.
That's good to hear, though. That's actually good to hear, because we're constantly saying to people, we don't have a single apartment or a house to rent, and they're calling these places and getting the same response. So it's good to hear that maybe some things are loosening up.
Yeah. Oh, definitely.
Yeah. I don't know, Josh, if the Crawford report has this, but I don't know. Do they track inflows of population coming here, specifically California? I don't know if that's
several of the places do. California's definitely been a big source, but it's not just California. I mean, it's always like the big 3, and in this case, there's also there's been one of the last things I saw. I should probably try to find that article and send it out to everybody. Like, what was it? Seattle, New York, California, but specifically certain parts of California in particular. And then there were it was a weird supply from like the Midwest as well. A couple places, but overall, if somebody's going to relocate, chances are they have a relocation in general. And there were a lot of investors, but it wasn't just the investors. It was the demand as a whole. I mean, you have every wholesaler under the sun, trying to get into it. It was kind of like a different version of the market, years ago, when you have how many syndications do you think there are around trying to create investments and stuff around, and those aren't just like single Californians or whatever. I mean, we have such a crazy population growth. Our economy is exploding in so many ways. You have the electric vehicles, the semiconductor people. I mean, every week, Marilyn and Ruth, you guys are on the meetings every week. How often are we talking about a new company coming to Florence, AJ, Buckeye, and bringing 1,500 jobs or opening up 2 million square feet worth of space. How often?
Right.
It's just about every week.
Yeah. Yeah.
You know? So there's such a strain between the investors, the actual people here. I mean, there's from every angle, and that's why Arizona is its own weird anomaly. So if you could see the screen now, this was what truly puts it in perspective. The rental demand is huge, will still be huge, but look at this. Sales are down 22.8% month over month. Okay, that's kind of normal, having it go down between June and July. You know, as the heat goes up, sales go down. That's proportional. But year over year, we are down 31.6%. Fred, Bob, like, remember, what was it, the other day, you and I hopped on, and how many sales did we see for the month so far? 3,000, was it?
Yeah, something like that.
Yeah. See, this is it. This shows 5,962 sales total in July.
Mm-hmm.
How many sales should we have truly each month? And in just a normal month. I mean, you saw what we had last year, 8,700. Yeah. So that's, how do we put this in perspective? And forgive me, being able to convey these in a conversational manner is what I'm trying to learn and be better at. What all has to transpire for a city like ours, Phoenix, to literally drop over 30% year over year? I mean, that's just a generic nope.
Yeah.
You know, right?
Well, that's a loss of spending power. You know, I was talking to somebody else about it, and you know, they said if you have a house that's at 2.95% and you're looking to buy a new house and get in at 5.75%, you get sticker shock at the new payment, and you're like, well, why would I get rid of my low interest rate, my low payment, to jump into a bigger payment and double the payment with a higher interest rate? So a lot of people are not wanting to pull the trigger and become buyers, and that's drying up the demand for what's on the market, and that's why you're seeing the sales go down, because people are they're pulling back. They want to, one, it's inflation, and two, they're getting a little nervous, I think, about a recession next year, so they don't want to change too much and add to their monthly budget.
I think that's going to be the whole key, is what the feds end up doing or not doing over the next couple of months, because you can see a direct parallel as they've tried to control inflation by raising the interest rate. It's knocked the market right out of the real estate as far as purchasing, because it's like you said, Bob. I mean, yeah, Charlotte and I have a mortgage loan in the 3% bracket, and if we were to do the same amount today for a decent interest rate, it would be almost twice as much.
Yeah, exactly.
Yeah, it's crazy.
Yeah. And
Okay.
you know, the other thing with inflation, you know, everything's gone up. So it's not only a $400 or $500 extra on your mortgage, it's an extra $300 you're spending for groceries, and an extra $100 in gas. All that stuff starting to add up, and then you go, well, it's $1,000 extra, and your salary went up 5%, 6%, but it didn't go up 20-30% to cover it.
That kind of goes back to you, Dad, talking about the cost of cash flow investment properties and stuff. So let's say your average interest rate, I just pulled up the we'll get into details about interest rates too here shortly, at 5.65, which is what security agent popped up with, a $400,000 home, $2,676 PITI, right? If it goes up to 8.65, that's $3,400. Okay, so number one, how many people can afford a $2,700 a month house payment to begin with, much less $3,400 a month?
Yeah, that's true. Well, the average Arizona can, but it's the relocations that come in. that are making 150,000 a year that could afford it. That's what I'm getting at is I think that inflow is starting to slow down maybe a little bit. That's why the rentals, like high-end rentals, aren't renting as fast as they did.
Yeah. Well, that graph showed that in an ideal world, let's go back to like the 80s, 90s, whatever it might be. The ideal ratio of your household expenses to your income was what percent?
20 for everything.
Yeah, like it was what, in the 20s, right? Low 20s.
Conventional, I think, says that you can go a max of 28% on mortgage and 36 on your total expenses, total monthly expenses.
Yeah, and the graph that we looked at, I think it's actually in here or whatnot. Later on, it's where the average person today is in the 40s.
Yeah, that's putting a real strain on. Yeah, and so if you're asking them to move into a new house and put them up into the 50s, now you're really stressing them out.
Yeah. So it's the affordability, it's the speculation, it's the fear. I mean, can you check? Are there any boxes that we're not checking off right now as far as why sales are down? Is there anyone we're missing?
Yeah, well, I think that's it.
Okay, so new inventory. Now this is where this is again supply and demand, right? So now you have all these investors who are mid-investment. They are committed. That who knows? They might have been fixing up a home for the last 3 months, 6 months, year. We have people buying rental properties, and all of a sudden it's like, oh crud, what's going on here? So we historically have had how many homes on the market for the last 6 months, 2 years, 5 years, call it what you will. How many homes have we had on average?
8 to 9,000. We've
been dipping up to fives. Then we've been watching it come up, right? Mm-hmm. So we had like 7,000, 8,000, and remember when it got above 8, we were like, whoa, we're getting there, Just last month, how many did we add just last month to the market?
Oh my goodness.
Oops, sorry, too far. So yeah, new inventory. Over 10,500 homes added, which meant year over year, that's 7.2% more that month that we added.
Yeah, that's pretty impressive.
It is, but I'm concerned that it also represents a lot of fear on the part of homeowners.
Yeah.
Mm-hmm.
Well, how many people, like if the fear continues in general, all the investors, what are they they're going to dump or whatever it might be. I mean, for homeowners, there's two different perspectives. Are you wanting it to level off and make it easier? Or are we, because for someone that owns their home, you're going to have to deal with the reality of, do we want home prices to keep going up, or do we want things to level off and become more stable? There's benefits to both. What do you think?
Well, I think it's healthier if it levels out.
Yeah.
Because the home seller has what I was getting before was the home sellers wouldn't put their homes on the market because there was nothing for them to buy.
Exactly.
Now there's something to buy, but the interest rates are so high. So I think once that levels out, and if interest rates will peak and then come back down, then I think you'll see people wanting to come back in. But I think once you get a leveling off of those interest rates, they'll start coming in. But yeah, but right now it's tough to give up a 3% interest rate to go in at 5.5%, 5.75%.
I couldn't understand it. But Dad, what were you so I interrupted you. What were you saying it was going to impact homeowners?
Well, I think as far as rentals or buying homes, or I don't remember.
We were talking about the new inventory, and you said that this is going to impact homeowners in general. And I
think that there's an underlying fear that is going to we're either going to do it in a healthy way, or but what I think is probably going to happen is that the government will intervene again, and they're going to have to figure out a way to make home ownership a little bit more affordable, and to make it so that the market will stabilize, and there will become more of an interest of people to buy. The issue that we have right now is that the prices are so high. In order to get into an investment property, I mean, an entry level home is like $400,000, and they have to get well over $2,000 a month just to pay the payment.
Yeah.
And that's just a small home. I mean, we literally have an investor that paid $400,000 and are getting $2,300 a month, something like that.
Mhm.
Or $1,995. They lowered it,
Yeah.
and you know that's a market that is not super sustainable for the real estate for buyers. So I think I think we need to keep an eye out on our bulk buyers and the huge market, you know, the huge agencies they're buying up properties, because they still are.
Mhm.
And they're preparing on one end for continued inflation, and on the other end, because they can afford it, they're preparing for a crash.
Mhm.
It's
Yeah.
crazy. Yeah.
Yeah.
And so I think it puts the rest of us in the middle, and we're part of that general public that's walking around going, what do I do? What do I do?
Mhm.
And
Yeah. Well, it's a shame so many people, and it's understandable, human nature, obviously, but we want our cake and we want to eat it too, right? So that's, you know, we want to sell, but we don't want to sell until we get top dollar. But at the same time, when we sell at top dollar, why can't we buy at the bottom of the market again? Come on. You know.
Yeah, that's true.
but we still have in our memory where we were bailed out. And
Yeah.
so people still have that memory there, and unfortunately I have a feeling that the government may intervene again, and I don't mind it if it's to everybody's benefit, that maybe they begin to lower the interest rate.
Well, let's go ahead and fast forward there, because new inventory 20,000.
Uh-huh.
All right,
Wow.
look at that year over year increase. Look at it, everybody. Let's say it together.
100%, huh?
92.2%.
Yeah.
Total inventory up year over year. We are basically double our inventory from last year.
Yeah.
And I mean,
Yeah,
if you really boil apple to apple, it is actually over double from last year. But
And
that's
Josh, if you look at it, it's only from April to July. So that's even more impressive. It's happened in 3 months, which is
Oh,
really
geez, yeah.
spectacular.
yeah, that day, it's like almost you could pick that one day in March and it's like, kapow. Yeah, holy cow.
It didn't just drift up there all year. It just shot up there.
So I guess you know what that means for property management is that whenever the new, not right now, but in 6 months to a year, whenever our occupants are wanting to re-up, they're going to want a better rate. They're going to want a better price, and we're going to have to talk to our owners and say, listen, we have a bunch of rentals that are coming on the market now. The prices are going down. In order to get yours re-leased, you're going to have to take a $200 a month, decrease.
Show value. Yep. Yeah.
And right now, a lot of these people, they're not even clear. They're probably barely making their payment if they had to finance it.
Yeah. Oh, that's going to be a whole different market too, because owners are only going to be able to go so far down, and that's, again, I love that statement by Warren Buffett, because it's so fitting for so many situations. It's not until the market changes where you see who's swimming naked, or the tide goes out where you see who's swimming naked. That's it. Once the tide comes in, we're going to see who had the safety nets, who was able to put the right amount of down payment, because for an average home, kind of behind the scenes, this would be a great other meeting. What do you think the proper cash flow, like at the end of the bills, how much should you have left when it comes to cash flow for a rental property?
As much as possible.
That's right.
But minimum. Like, what would you say
100.
is your minimum threshold each month? I need to clear this to at least put into savings for the stuff.
I'd say at least 100. I know, Josh, when you and I first got into it, when they were doing the foreclosures, that was always my goal, is after everything, property management, all expenses, I was hoping to get $100 extra for my clients so that at the end of the year, they'd have $1,200 saved up for repairs and expenses. So if you can get 100, at least anything over that's gravy. But if you get at least 100, you can start building it up.
And realistically, that was a $125,000 home that we were trying to get that deal on. You know what I mean?
Yeah.
Or less. So now that they're buying $400,000 homes, what kind of a return is that in general? So, I mean, truly speaking, like in order for a house to be worthwhile, in my opinion, you would need to truly collect $300 on top of everything at the end of the month, in my opinion, because that's savings and profit.
Yeah, you're right about that. But I always looked at single family homes as more just hanging on for the appreciation. You know, when I talked to my clients initially, when the old foreclosures happened, just get into it, hold on to it for 10 years, and they all make good money, but that's the key. Now, if you want to get cash flow, big cash flow, obviously you got to go to multifamilies.
Yeah.
But, and I talked to my clients about that, you know, getting out of single family, going into multifamily. But when you're in single family, the big driver is appreciation. You know, if you just hang on to it without negative cash flow, that's half the battle right there.
I think that probably whenever you're talking about how much, back then, Bob, you know, if something was 100,000, then you are talking about $100 a month, really. But if it's 300,000, 400,000 now, you know, I'm not seeing that most people have that much room at all. I think they're a month or two away from bankruptcy or foreclosure if they're not careful. And I'm still thinking that multifamily is the way to go, because if you lose one renter out of 2 or 3, you've only lost part of a payment, and you have the possibility of having a little bit of extra.
That's true. Yeah, multifamily they do cash flow a little better. But it all depends on what their time frame is. If they're retiring and they want cash flow, that's a great way to go. I think if they're younger and they're in the acquisition accumulation phase, I think it's better to go with single family.
Yeah, there's definitely benefits to both. So let's I don't want to keep you guys here for 2 hours. You guys wouldn't stay anyway, but let's keep moving on here. So actives, this is where we go into, you know, what's truly active or not. CCBSs, UCBs, not technically active. They do have a contract. So when we're dealing with reality, 18,000 active homes. Okay. So, CCBSs, I don't know. It's neither here nor there. You can see that they're all kind of hovering, and actually CCBSs went down while actives came up. That's just as steep, if not even steeper, you know, of a curve there, you know, since March. So if you go off of a population basis, 17,000, 18,000 active homes, that's not even remotely where we need to be. But if we go off of a demand basis, okay, which if we go back to here, sales, okay, we had 6,000 sales. 6,000 sales coming back to 17,000, 18,000 actives. How many months supply do we really have right now?
3.5.
Yeah, 3. I was gonna say 3. Yeah.
About
3.5
on the dot. Yeah. Right. So technically, what market do we have right at this snapshot?
We're in equilibrium right now.
Technically.
Yeah, I think it's a buyer and seller's market. I think we're right in the middle, and it's where the realtor could say, flip a coin.
You know, but that's today's snapshot. Literally, it is a normal market. Technically, if what kind of market's going on right now? What's the real estate market? Oh, it's a normal market. Can you imagine responding to that? And people are like, what? You know, like,
what does that mean? One last thing, Josh, that I think is really important. I wish that there's a way that we could know, is that there's an underlying market here, and that's you know, the pocket listing, non-listed type of situation where we have real estate people that are going after all of those. And so there's another market behind this that I wish we knew more about.
Oh, absolutely. Absolutely. Okay, so we kind of got ahead. So there we go. We're for the first time, we're actually almost in agreement. About 3 months inventory, pretty close. Yeah. Right. So that is what it is. That really doesn't mean it doesn't mean anything, honestly. That's a snapshot for today. Where are we headed and how fast are we headed there? That's kind of, that's the real thing. So new list prices. Okay. You can almost see right at the bottom. If you have a big enough screen, you can see there's an arc there. Where do we think we are now? Okay, I think, what was it? We peaked out at what, 428, something like that. What do you think?
I can't see it on my screen.
New list price. We're predicting. What do you think the new listings? Do you think they're up, down? What do you think? Pick a number. Where do you think the average new listing is for today, given what we see?
I think it's going to be down a little bit. Yeah.
Down a bit.
I'm kind of almost thinking it would be the same, or there would on the market side of it, the listing side of it, it would be a little bit, barely a little bit higher because they used to have all of the developers who were building and increasing their prices.
Yep. You saw they're liquidating. Okay. Down. Prices are up year over year, but if we look at this right here, okay, we are up 17%, but you can see we've dropped, right? So 480 is actually, wow, I was way off with our new list price. I think I was thinking of the sales prices. Okay. So you can see they've leveled off a little bit. Okay. They're not down a lot, but see, it says up year over year medium. This is where I wish they had over last month, because you can see since May, there's been a slow kind of regression in list prices. But as a whole, list price 480 and 592. Ignore the 592. 480. Are sellers still a little bit unreasonable?
Yes.
Yes.
Okay, so let's get to what kind of matters. And so we saw that they're slowly dropping their list prices, barely. Where do we think the average sales are?
Probably the 428, huh?
Do you think that they're down a couple percent, up from, and let's really think about just like last month, 2 months, obviously they're up over last year, obviously.
Yeah, I would say down a little bit.
Okay.
Yeah.
5% maybe.
All right, so you can see sales price plummet right there, but that's the average. We don't care about the average, right? Look at this. 453.5. Okay. So year over year, again, that doesn't matter. Okay, look at where we were June. Okay, we were what? Pushing the, it's hard to see with those lines, but that's like right in the middle, isn't it? Like between the 500 and 450, isn't that almost like right in the middle? 475-ish, realistically?
Yeah.
Okay. So we've seen what? If we had to just guess, what is that, about a $20,000 drop maybe?
Yeah.
In 3
About
months?
4 or 5%. That's pretty
well,
short period of time.
20% unfortunately is about half. Yeah, 5. Yeah.
Oh, that's insane.
So, yeah. So here's our forecast, and obviously we see it happening. So they are, I'll just jump right to it. Okay, a decrease of another $9,000 in the next month.
And you're noticing, I don't know if you, Josh or Ruth or Bob, you're in Florida, aren't you, or something?
Yeah.
That some of the developers are beginning to offer compensation to realtors again.
Yeah, exactly.
So that tells us that something's happening.
And they're also offering to the buyers rate buy down. So they'll lock you in a rate without you having to pay the points up front. So they're trying to get people locked in at like 4.95% as an incentive to sign with them.
Okay, so we've been keeping an eye on this, and I actually saw a stat the other day. Okay, and this is where our job is to keep people in check. Seriously, I was listening to one of the guys I watch on YouTube. It's like Entretainment or something like that. Is Benjamin Bet David is his name, and he was talking about real estate numbers. Okay. Now, he was talking about how interest rates are going up and they're predicting more raises, and, unless the government on purpose steps in to reverse that. And he was talking about between 4 and 8, and then the difference between 5 and 10 and all this stuff. But then he went into distressed sales. Okay. Now, has there been a distressed sales market in Phoenix in particular over the last 5-6 years or 10 years in general, really?
No, not really. Mm-mm.
Okay. So has there, if you were going to base a number off of where we were 6 months ago, as far as distressed sales, out of 6 million people, literally how many were there, Ruth? We actually saw it. How many?
Like 2?
Exactly. 2. Okay. 2. Now, he was like, distressed sales are up 700%.
Oh, no. Mm-mm.
Okay.
No.
700% of that's 2. Okay, we have 6 million people. 700% is not much. Realistically, what in a city of 6 million people, how many people should be, and not saying should be, forgive me, but are probably realistically in the foreclosure process in a normal market? Okay, because let's say you just can't every year go out and just buy a home in 2 months, be like, okay, I'll sell it. It'll pay for itself. That's what everybody's been able to do. Okay. So take that away. How many should we have?
But normally it should be about 1% of the entire market.
Yeah, a couple hundred maybe.
Yeah, a couple hundred. Okay.
Yeah.
So if it went from 2 to 200%, what kind of an increase is that? I mean, 2 to 200. Sorry, from 2 to 200. There you go.
Yeah.
There you go.
Yeah.
All right.
But if we went by what the other guy said, and it was 700% based on what you and Ruth saw, that would be
1,400.
7.
Yeah, it's just
period.
Yeah.
From 2 to 10.
It's up 5 times. We've had 5 times the amount of foreclosures this month as we had last month. It's like, yeah, that's 10. Make sure we're watching the numbers behind it to keep it in perspective. Because yes, foreclosures are up 700%. It's like, wow, that sounds bad, but I knew the numbers behind it, and immediately I looked at April. I'm like, that's not right. He's So be careful. Okay, so distressed properties. Here we go. All right, year over year, we're up 20%. Okay. Now, what do distressed residential properties pending? Okay, so notice it's foreclosures pending. Does that mean they got foreclosed on? Does that mean they're going to get foreclosed on?
No.
Exactly. So how many of these are probably actually going to sell or be able to do something with their home and not have to get foreclosed on probably?
Probably 75% of them.
Yeah, I was going to say half of them, but yeah, that's probably true. Mm-hmm.
Yep.
And
what's that?
I was going to say, the reason why we're not seeing a lot of foreclosures is I had an investor ask me that a year ago. He's looking for foreclosures. I'm like, in this market, nobody's upside down on their loan. They're just going to sell it and move on. So that's why you're not seeing a lot of foreclosures.
Exactly.
There's so much equity in properties. Nobody's upside down.
Remember when there were 60,000 homes on the market and 59,900 of them were short sales or foreclosures?
Yeah.
I mean, this is nothing. We are still so strong, but yes, things are changing. Okay. And that's what we're keeping an eye out, because they are tiny now, but they are certainly growing. And we just talked about people and the cost of living, their mortgage rates, their emergency funds. We've talked about all of that. And obviously there is not much leeway and room for any life events for a lot of people right now. And that's going to factor in here coming up. So distressed sales, let's say we had 2-3 months ago. Where do you think we're at now?
Like 100, maybe. Guess that.
Oh, I don't think really much more than that. I mean, I'm thinking about the timeline of, people that, I don't know,
Zoop, zoop, zoop. Point
maybe
two.
10.
So if we had 5,962 sales last month, 3.
Yeah.
Oh no, those were short
Yeah.
sales. Sorry, you were close. Ruth, did you say 10? Who said 10?
Ruth.
Yeah.
Okay, there were actually 11 sales last month.
Yeah, because it's a time thing. People haven't had, there's not been enough time really for people to start losing their homes, because all these people that have bought in this current market have bought at 2%.
Mhm.
You
Yep.
know?
Yeah, 3%. Yeah.
Sure,
This
3%,
higher
yeah.
interest rates just kicked in the last 6 months. So those people will be 2-3 years out before that happens to them.
I agree.
Yep.
Yeah, I think so.
Okay, I wish this had like an actual gauge again of these sales each month, because since they're so low, they're not actually registering them. But for the last 3 months, you will have seen it go from 2 to 6. Now we're up to 11. Okay. Now, not to dig into what he was doing, but from 2 to 6 is 3 times the amount month over month. From 6 to 11 is 2 times the amount month over month. So next year next month at this progression, we are probably going to see close to 20. And then do you think we'll see 40? What do you think this is going to be over the coming months with interest rates and everything like that? This is 3 months straight of what you would call exponential growth. Call it.
I don't know.
I'm not sure.
Yeah.
It's nothing yet, but you do see the makings here of what would be something over the next 6 months. So let's keep an eye out on this, because I think it's nothing yet, but my prediction is, let's fast forward to next February. I think we're going to be in the hundreds. Okay, that's my prediction. It's unfortunate, but I think that the safety net is going to catch up to people overextending themselves, all these investors trying to forecast. So many flippers have been doing their homes for the last 6 months, with supply and demand issues and stuff. There's so many projects underway. So we'll see.
But they're still out there. We got 10 offers on 7 offers on that house, but all of them were substantially lower.
Yep.
Yeah. So the margins aren't there anymore. So they're offering lower. And people like my guy finally just said, I just want to get rid of this. Let's just take, So we got an offer. It was low, but no inspection period. They were paying all the closing costs, closing in 7 days. So, people were going to.
So happy.
Yeah.
Well, I'm so glad they finally got done with. I'm so happy.
Me too. Yeah, me too. I'm really happy with them. Yeah.
Yeah. So when it comes to, just think about the fact that we're talking about all this stuff. So we're talking about prices potentially coming down because of supply and demand. All these people that did buy their homes are now going to, let's say rents go down to $300. If they didn't have that $300 window, they're not going to be able to cash flow their rental property. What if it goes 1 extra month, 2 extra months? That's all I'm saying, is that for the next little while, there's a lot of precarity. Is that a word?
Yeah.
So there's that. So last but not least, average days on the market. Days were up year over year. I actually went too far. So 33. We are officially out of the 20s. When do you think we're ever gonna come back to the 20s? Like, how long do you think? And where do you think this is going to probably level off?
Well, a couple months ago, I would have said a year, but I'm not sure now.
Yeah. Because historically speaking, isn't it between 45 and 60? Historically?
Yeah. Mm-hmm.
Yeah. So.
Yeah, I don't know.
Month over month, 3 days. That's 10% more. So that's, every week when we're talking, oh, we got 1,000 more homes on the market. Oh, we got 1,000 more homes on the market. Oh, we got 2,000 more homes on the market. Obviously, as we see it go up. So what they say, to some, this new dimension has become known as the Twilight Zone.
The Twilight Zone. Yeah, for sure.
Hey, Josh,
Yeah.
if you if we take Arizona's history, it would be whenever the fear kicks in and everybody starts to try to liquidate, which it's going to be another 12 to 15 year cycle, because we had it in the 80s, we had it in the 2000s, and we're at the beginning, well, 2007, 8, 9, and I think, unfortunately, unless something happens that's a little bit more healthy than in the past, we're up for another crash within the next couple of years. And I mean, it just seems to be something that is predictable in Arizona. I don't know about any other place.
Yeah. Well, the good thing about Arizona is that we will never go to zero, because our economy, even in all of those things, we were still growing. They just advertised that for the first time in whatever, California's population shrunk.
Yeah.
Well, and now we're able to advertise something else. We have water.
Whoop, whoop.
And the rest of the country or a lot of the country doesn't have a lot of reserve water. But I mean, that's big, and that may kick in as something that affects real estate, because historically, what have we had? Developers have had to have 100 years of water available or something, and they're not able to do that now. But somehow they're all getting permits.
Yeah. Well, I mean, that puts us way above Vegas, for example, and Nevada. I mean, in general. And okay, so if you get a chance, I won't go into it in detail, but look at this, because they actually went back to February. You could see they thought it was interesting how fast this is taking place. So absorption rate, normal market 20, we were at 191 through 212, and then March, things changed. So in April, the demand was down, and then May, trying to bring down inflation, blah, blah, blah. In June, we saw a 20% decline. And so you could just see this in between March and now, they kind of documented what they've said and how it's happened. So here's the market cycle. And, we all know, because we went through it, I hate to say it, but this is like, this last time was my first upturn, because Dad, we got started in the fall of the market in 2008, 9, 10. So we didn't get to ride that wave, but we had it crash. We were there during the crash. So we watched all of this happen, and we created our real estate careers during this fall, right? And then as it came back up, blah, blah, blah. I mean, nobody for 6 months, everybody was just like, no. And then eventually, we found our spot. So we just have to, keep the faith and make sure we're educating people, because in every market, there's going to be some new opportunity. In one market, it might be first-time buyers. In another market, it might be investors. In another market, it might be multifamily, land. Who knows? Everything will develop a new benefit, so
multi-generational housing.
Yes.
That's going to be the next one.
Yep. But
Bob can head it off over there in Florida, because that's where all the retirees are going. But soon all of the kids and the grandkids are going to be over there too. So
yeah.
Here's the last kind of little thing. July 2007, there were only 4,730 sales total. This year, July, 5,962. A lot of people said, one day their phone just stopped ringing, and that was the day. We are very close. If you incorporate the growth of the Phoenix area, Maricopa County in particular, in 15 years, that's probably proportional. So this
see the next 6 months.
it is. Exactly. So that's basically what I had for today. I just wanted to show you this because this was last week's Arizona Commerce Authority, right? So they talked about, advancing chip production, blah, blah, blah. But this is what we were talking about. Article highlights TSMC's $12 billion investment in Arizona fueled dynamic growth in the economy, driving up housing, commercial development, all in that area. And it's not going to be truly active until 2024. So we still got 2 more years before that's even up and running fully. And you've seen the impact already.
Yeah.
Okay. Named one of the leading tech markets. Wall Street Journal highlighted Arizona's booming Loop 303 corridor. It's officially a thing nationwide. So Arizona's growing, and that's the saving grace, is that no matter what happens, people will still be relocating here. People will still be buying homes, no matter what, So article mentions Tech Launch Arizona achieved over 300 new faculty inventions during the most recent fiscal year, a record for the program. Southern Arizona, you could basically say from Florence on down, it's just exploding too. So it's a precarious time, but it's still amazing. What do you think?
I don't know. It's come like you almost don't want to say anything because everything is so different.
Yep.
But some of us old ones, we've weathered those markets, and we'll weather them again. So
yeah, that was the last
just
thing.
keep doing your thing, and there's always people that need to buy, and there's always people that need to sell.
Yep. And here's the funny part, because I noticed this when Bob and I were trying to talk about mortgage rates the other day. Okay, so if you Google today's mortgage rates, okay, they will scare the snot out of you. 30-year fix, 6.965. Okay. Now, if you go to bankrates.com, it actually says national average 5.6. 6.9, 5.6. That's a big difference. Okay. So if you go to Rocket Mortgage, right, they're pretty known. They have a very good website, updated, regularly. 6.375. So depending on where people go, they're going to see well over a % difference in the going interest rate. So make sure we have a great loan person, because it does make a difference, and try to go to somebody who can give you the facts. And because now that we're in the 6s, that interest rate is going to make more of a difference than $10,000 off of purchase price.
Yeah, well.
So that was that. Okay. Any last thoughts, guys?
I'm flying. Got lots of stuff to do.
Well, have fun. Be safe. And thank you, everybody, for attending. It looks like Bob had to take off, and Fred too. So thank you, Marilyn. Thank you, parents, for jumping on. I really appreciate it.
All right. Have a good one.
All right. Talk to you guys later.
Bye, guys.